actually, before we get the numbers through. We might bring in James Gerrish, who joins us live from Shaw and Partners, to kick it off for us. James, good to have you with us this afternoon, and just seeing an update here with the remaining coal assets they're being sold off. But we know that in recent times there have been sort of exiting a lot of those coal assets in particular, all waiting with bated breath for this result from Rio Tinto. I guess we all know it's going to be a good one, isn't it, after those pretty strong production numbers?
Yeah, good afternoon, Leanne and guys on the panel. Yeah, we are waiting for the Rio result. It should be out around 4:15. So, the news that's just broken around the coal sales, that's going to be an interesting part of the result this afternoon, insofar as, with the timing of when they're going to see or pass that through to shareholders. Will they wait until they actually receive the funds, or will they do something on a capital management perspective ahead of receiving those funds? So, yeah, it is going to be a good result, there's no doubt about it. In terms of market expectations, we're looking for a net profit around 4.45 billion on EBITDA of about 9.6 billion. So the dividend will be interesting. The market's sitting at 1.10 in terms of the interim dividend. So an interesting result, no doubt, Leanne.
Yeah, absolutely. And look, we did see Rio Tinto shares doing pretty well there today. I note that the metals and mining index was up at about a 3-week high, and BHP as well, also joining in on the party there. It's at about a 4-year high at the moment. I suppose that was all off the back of an increase in the lift that we're seeing in commodities. It really didn't seem like commodities through the session were rattled at all by the escalation in those trade tensions.
No, they weren't, and that's what was the main driver of the market today in the commodity complex. The banks were reasonably weak, so it came into the commodities to lift the market off the mat from early weakness. Ben made some interesting comments just before around fund managers when they've been reasonably inactive in the market at the moment. We've seen it in the production numbers earlier this week. We've seen it in Credit Corp again, where beats have been bought the following days after it. So it seems like managers of money are waiting to see a result, and then the trend of that result is lasting for a few days thereafter. We've seen it on the weaker side in some of the production numbers coming from the mid-cap miners, resources, Syrah and the like. So, I think people are on the sidelines waiting for the report, and then they're acting thereafter, Leanne.
And James, hey, it's Ben. Just how do you think these resource stocks are going to react? Because it seems like the market's expectations are getting pretty full. And, this news, I guess, from Rio is kind of good today, but you look back and you think they actually sold all those coal assets at almost the very bottom of the coal cycle. The coking coal price has actually doubled since they sold these assets. So to me, it's another example of pretty poor decision-making by the business. But the market's obviously excited about the outlook for capital returns. You've got to feel for what to expect, how the market's going to react.
Yeah, it was the same case with BHP when they announced the sale of some of their shale assets over in the US. I mean, they bought them at significantly higher prices. The market's sort of raving around about what they're getting at this current point in time, which I guess you've got to look forward rather than back. And looking at what they've done in the past doesn't really help us investing in the future. I think the market's super bullish, uber bullish, the resources space at the moment. I think it's a crowded trade on the long side. So, we don't have a lot of exposure in the resources across our portfolios at the moment. I think it's the trade to be in over the longer term. As inflation does tick up eventually, I think resources are going to be a beneficiary of that. But in the short term, we're on the sell side of resources. So I'm with you. I think it's a crowded trade. I think there's so much high expectation built into the sector. I sort of think it's going to be a buy the rumour, sell the facts scenario in terms of these capital returns coming from some of our big miners.
John, what's your view on the resources sector? And I know not the stocks in particular, but the commodities themselves. Do you think there is further to run? I know that there's been pressure on copper because of the trade tensions. I mean, where do you foresee commodity prices going from here?
Well, copper put in, if you look at New York copper, got up just about to 3.30. And then came roaring off about 15–16%. So, when commodities move, they can move very, very quickly. And I don't like the sound of overcrowded trades. We saw what happened in some of the FANG stocks last week. So it's a little bit of a warning bell. I think for the short term anyway, commodities will probably stay in this range. It looks like we may be bottoming. For instance, if we take copper around the 275, 265 level, it's probably bottomed a little bit. But I don't see it going up a lot, not while the trade uncertainty hangs over them. the fact that a lot of people got burned when it topped out before and then came roaring. It topped out in June, and by the early July it was down 16%. So I think we're in a range for a while. Longer term, I like commodities. I like copper especially, but in the short term, I think we're range trade at best.
Okay.
Yeah, just if I could
Sure,
add to that,
yeah.
I mean, but what interests me is like you look at Rio and BHP, etc. They've probably put on 10% in terms of their share price, while we're seeing quite a decent deterioration in the prices, the underlying. So oil's come off, copper's really come off, and iron ore's pretty flat.
Yeah.
And so to me, it's actually like the market seems to be getting excited about the capital allocation. But I agree with James. Like, it could be a buy the rumour, sell the fact classic case where these companies now are going to have to deliver some pretty special returns to shareholders for the runs to keep going.
Yeah, and there's nothing exciting happening in the commodity space
no,
right now.
there's nothing fundamentally that's driving it, other than maybe, some fund managers are too underweight, and you've got those sort of typical things that happen.
All right, excellent. Let's move on from commodity. Sorry, James, go for it.
I was just going to say one of the things that we look at is just the correlation with emerging markets as well. Typically, the big miners have a pretty high correlation with emerging markets, and that's really that correlation has stopped. There's been massive outperformance by BHP, Rio, and the rest of the commodity complex over and above those emerging markets. I know there's issues happening in China, but it is something to keep an eye on the radar as well.
Sure. Okay, I do want to talk about some other stock movers there today, one of those being Xero. We haven't actually spoken all that much about Xero today, but a good performance. It's not in the top 5, but certainly among the best performers there today. A rise of about 3.13% at the moment. They have purchased HubDoc, the Canada-based data capture solution company, HubDoc. I suppose this goes to the idea that, Xero's done a pretty phenomenal job, well, just judging by how the share price has moved, here in Australia. Now this expansion kind of continuing overseas. James, what did you make of that update? What's your view on Xero going forward?
Yeah, it's an interesting play. They've obviously done incredibly well growing the business. They had a few teething problems when they rolled out their solution over in the US, but now globally they've got 1.4 million customers, so it's been a phenomenal success story. This HubDoc has been a plug-in for Xero, so they've just gone out and acquired the plug-in. So this is sort of one of the, I guess it's an idea of what they're going to do going forward. It's going to be earnings dilutive in the near term, the acquisition. So look, it's a reasonable announcement. It's not a massive acquisition by Xero, but I think they're reconfirmation that they're going to be cash flow break even, if you strip out acquisitions going forward. That's probably what the market likes in this regard to this update, Leanne.
Okay, and I guess, Ben, Xero is one of those that we've been talking about in recent days because of the tech stocks. It almost falls into that tech space, doesn't it? What's your view on Xero? Yes, it's been under a bit of pressure, and maybe because of the tech sell-off we've been watching. Yeah. Do you have a view on the outlook?
Yeah, I really like this business. Okay. It is like it's one of these businesses that is very hard to value. It's just going sort of EBITDA positive, and yet it's got a $6 billion odd valuation. So it's hard to know whether that's excessive or, maybe too pessimistic, because it will depend a lot on how well the company executes over the next 5 years. But there is a massive potential market for this business. They've been very effective at starting to capture that market. They're moving into new geographies, and in particular, I think the UK is going to be a big driver for them over the next couple of years. There's some big kind of changes happening to their accounting laws, which is similar to what happened in Australia when GST was introduced, which basically meant all companies had to start to do electronic tax returns, and data was going into the cloud, and the tax office needed to get regular data from business. That's now happening in the UK, which they're now, as a market, they're really growing significantly. And so that's when MYOB did really well in Australia. It had a couple of years of very strong earnings growth. So, but it's a global business that could become a much bigger one than it is today. All
right, excellent. Look, we are just seeing Rio Tinto's result coming through, so I might just go through this one very quickly for you. In terms of their net profits, up 33% on year to $4.38 billion. I know that there was an expectation, well, James was just mentioning 4.45, an expectation largely for about $4.6 billion, but looking like the net profit has come through at $4.38 billion. But if you look at their half-year underlying profit up 12% on year to $4.42 billion. It says that it will buy back another $1 billion in shares. That was, of course, another big component of the result we were looking for. It says that the buyback will be for the London-listed stock to be completed by the end of February 2019. Their interim dividend has been announced with a rise of 15% on year to $1.27 I should say, per share. So just taking across a few more numbers here in terms of their production guidance. It's unchanged from the second quarter operations review. And as I say, looking at that share buyback there, in addition to the interim dividend that's been announced there at $1.27, a share buyback of $1 billion in those Rio Tinto PLC shares have been announced. Their net debt at the first half end is at $5.229 billion. Their capital expenditure expected to remain at around $5.5 billion in 2018 and around $6 billion in 2019. They see additional cumulative free cash flow of about $5 billion from the start of 2017 to the end of 2021. Their capital expenditure, just to continue on from that, it's in 2020, it's been revised to around $6.5 billion. So just to take you across those numbers again, their first half net earnings have risen to $4.38 billion, but their first half underlying earnings have risen to $4.416 billion, so $4.42 billion. And their net debt has increased 36% to $5.23 billion from that December end. Their gearing ratio at about 10% there. So not sure if we've still got James on the line there. James, I think you're still with us. Yeah, look, I'd love to get your thought. I know that it's just breaking. I really appreciate your patience as well, just going through some of those numbers. I know your expectation there was at about, well, just over $4.4 billion. What do you make of some of those initial numbers that I've just read out?
Yeah, the market was at 4.45 on an underlying basis, so you said they were at 4.42, so a tiny miss there. I mean, the range on the market was 4.31 to 4.7, so they're at the lower end of that. In terms of the dividend, they've come out at $1.27. The market was at 1.10, so better on the dividend. To give you an idea about buying back $1 billion worth of stock, they've sold assets the value of $8.5 billion in recent times. So there's a lot of available liquidity there. You made mention of gearing around 10%. That gearing level is incredibly low. It's lower than they're guided or what they'd like it to be. So look, they've got a massive amount of capacity to do some bigger things than the $1 billion share buyback that they've announced over in London. So just on those initial numbers, you know, pretty much in line on the earnings chart, higher on the dividend, and the buyback there's obviously going to be a positive.
And just on that, and Ben, maybe I can throw this out to you, you know, more capacity to pay out funds to shareholders. And I'm just seeing another line here that the CEO says that $5 billion of sale proceeds will be returned to shareholders. They are yet to decide on how and when the sale proceeds will be returned. But that was another large component of it, wasn't it? Of course, after the sale of those US shale assets, I know that there's been a couple of other asset sales there. And that's another part of this result that we were looking for.
Okay. Well, I mean, the numbers sound a bit light to me. So,
they?
You know, well, just because I think...
All in all?
All in, like...
Or just the shareholder returns?
Just off what you're going on, profit. I just think the way that the share price has moved, the market's been pricing in a beat of expectations, not meeting or a very small miss on expectations. And I was going to say $1 billion sounds very light to me in terms of capital returns, but if they're also going to return another $5 billion, but still working out how to do it. I mean, I just think, I don't know what you think, James, but I just think at the moment you'd be crazy not to be doing off-market buybacks. These companies are sitting on massive franking credits, and potentially a lot of their shareholders won't be able to use them if Bill Shorten wins the next election. So get them back to them now, you know, because they could just be worth zero. What do you think, James?
Yeah, I totally agree, Ben. They should be doing off-markets and utilising that franking balance. Like, to give you an idea, I think from memory, the last 7 of 8 results, interim results, Rio's beaten expectations. So, the share prices ran really hard into this result. Normally they beat market expectations. This time they haven't. They've probably come in a shade under, in the backdrop of a really strong share price leading into the result. So, look, there's nothing in there to me that says, you go out and buy this stock at these current prices. Understand the $5 billion is going to have more clarity. I think the market probably would have liked some more certainty around that when that's going to be returned. BHP have been pretty forceful around how they're going to return capital. They've said, the funds that they've received from asset sales over in the US won't even touch the sides of BHP. It'll go straight through to shareholders. So they've been, pretty explicit there. Rio's, I guess, less so, but they've got the capacity to do it.
And look, I think the other part was that, Rio's attention sort of shifting to M&A, where in fact the growth will come from. Yes, obviously they're paying it out to shareholders at the moment, but wanting some further thoughts here on maybe that shift towards merger and acquisitions or, more corporate activity from the miner. It doesn't look like that's come. I mean, obviously still we'll be able to delve through the detail here, but is that something that you would have hoped to have heard, a bit more clarity on the outlook for growth, James?
I mean, you always look. The market doesn't like Rio, BHP, and any of them talking about M&A and going out there and opening their wallets. The market is fixated on capital returns at the moment. So I think from a market's point of view, it's all around that capital return story. I mean, it's one thing selling assets one side, and then the other is around going out there and buying assets on the other. So I don't think we're talking about growth at the moment. We're talking about capital returns. Everyone's out there with their hands wanting some cash back in their pocket. So that's the main story for these guys at the moment.
Yep, fair point. All right, cost pressures as well, because obviously cost inflation starting to return there. They've already started to warn about those pressures, particularly in the aluminium making business. But just on that, saying they've been able to offset those cost pressures with their productivity program. So that was just around the other item we were watching there. Look, we might actually wrap up the discussion there. But James, really appreciate you hanging on the line there just as that breaking news was coming through. Thank you so much, and we'll talk to you again soon.
Thanks, guys.
That was James.